What's up, everybody? In today's video, we're going to be talking about why are mortgage rates climbing despite the Fed continuing to slash interest rates. It's kind of an interesting conversation we're going to be getting into, but today is November 5th. Today is election day. Make sure you get out there and vote. It's less important on who you vote for. Just get out there and exercise your civic duty as an American citizen and get out there and vote. So, why are mortgage rates climbing despite the Fed cutting rates? Well, a lot of this has to do, everybody. First off, let's look at the current rates. Freddie Mac reported that the average rate on a 30-year fixed rate mortgage hit 6.54% by October 24th, 2024. That was just over a week ago. And it is still below the year's high of 7.22%. But the upward trend has started to weigh on home buyers. They're seeing this article gets into, they're seeing mortgage applications kind of decline. A lot of that has to do with kind of the time of the year. People prefer to move around springtime and kind of coordinate moving around school, but also, just the costs, there's prices are not going down. Prices are actually still up. We're seeing home sales down. They slipped 1% in September from the prior month, bringing the annual adjusted rate down to 3.84 million homes sold, the lowest since 2010. So home sales are slow. A lot of this has to do, everybody, with low inventory, but the rates are kind of lingering. Mortgage rates were as low as 6.08% in September. But as I just mentioned, we're up about 6.54% right now. And really what this gets into is that, yes, the Fed is cutting rates, but we're getting a lot of strong economic data. So, the jobs report or September job growth exceeded forecasts. So that tells investors and whatnot that, hey, we're in a strong economy. We don't need to cut mortgage rates. But here's the thing, everybody. What we see here for October, look at this. Here's another article, and this just came out, and this is from the Financial Times. So September job growth looks pretty good, and that's why those mortgage rates are lingering a little high. Look at October. October's jobs report, which features only 12,000 jobs added, really was bad. So I think, and really what this first article references is the reason that mortgage rates are lingering above the lows of where we were at earlier in the year is because we continue to get strong economic data. But apparently, this article is basing it off September job growth. October job growth was not good. I don't know why they don't reference October's job growth. This article just came out yesterday. They don't say anything about the bad jobs report that came out in October, but rates are lingering. Mortgage rates are lingering because we were getting strong economic data through September. We're not getting that strong economic data anymore. I foresee this to be, an indicator that we'll probably see some rate dips. We're probably going to see some mortgage rates will probably come down and adjust to the October jobs, which are looking pretty bad. And who knows what's going to happen? Today's election day and whatnot. I think there's probably more doom and gloom ahead for this economy than there is robust growth and whatnot. But we will have to wait and see. And, it's interesting. The worse the economy does and the more bad news we get, the better it is for mortgage rates. The more we can expect mortgage rates to decline with the more kind of bad news that we get. And that is what is happening in the news. That's why, yes, the Fed is cutting rates, but mortgage rates remain high because of the strong economic data. But what we're seeing as of last month is jobs report are starting to come in pretty rough. So we could expect some mortgage rate declines. So we are wheeling and dealing. We are closing a lot of deals on the real estate investment end. Fix and flips are selling. And we're in an affordable housing market, so we're not seeing a huge fall off. Mortgage rates affect us less in an affordable housing market. You go to higher ticket markets on the coasts and whatnot, and one little tick of the interest rates, I mean, it changes everything. We have not really seen a lot of slowdown. We're rocking and rolling on the flipping side. We're doing a lot of wholesaling, a lot of innovations, a lot of buy and hold. Rents are still strong. It's all about being in that affordable housing market. That's what we're most bullish on. So that is where we are at in today's video. Hit us up if you're interested in learning more about our real estate coaching. Use the link down below. You can set up a free call with us and learn more about what we do. A lot of our coaching clients are very successful, and just kind of follow them in the playbook. We do this day in and day out, and we'd love the opportunity to help you as well. So make sure you subscribe to the channel if you have not yet already, and we will see you on the next video.